Hey everyone, BC Richfield here on behalf of the Burbs Nest, where we teach you how to trade. So today we're going to take a look at ranges, how I implement them on higher time frame, moving down onto low time frame, what we look as our triggers, and how they can be really effective in choppy market situations like we've got at the moment. So without further ado, let's move on to this. I've got a Bitcoin chart here, which we can all see, and this is set on the daily time frame. Now, exactly as we covered on the previous sessions when we were looking at setting our support and resistance levels, what we're looking for here is we're looking for areas that have capped the market or where price hasn't been able to close beyond or below. All right, and they're our key points of interest, because beyond those points, we're looking for deviations, also known as fake outs or liquidity grabs beyond that, and then for price to close back within our range, giving us a high probability trade to the other side of the range. So, what grabs our attention here? So, if we look at this range here, at the low, we can see down here where we've got some nice confluence where this has kind of capped the market, right? If we look at this here, we can see that price hasn't really been able to progress beyond this point. We've got these long wicks here to the downside. So if we take our horizontal ray tool, all right, which is this one here, which I've got on my fast menu, all right, which we can move. And if you want to turn that on, you can just use this little star down in the bottom left. And then any of the favorites that you click on from these menus will be added up here. Okay, if you don't use that menu, then you want to go onto this menu here and select your horizontal ray. Okay, so we've got our horizontal ray, and then we're going to use our magnet tool. So that's this button over here. But again, what you can do is just press the command button on your keyboard. When you hold that on, it will snap the magnet on, meaning that when we go to put price anywhere, it snaps it either to the body of the candle or the wick, depending on where you hold it. So this is the first point of interest that I've got here. And what we can see is we can see how price couldn't get beyond it here. Also the similar back here, but we're interested in this. So we've got support, support, support. Okay. Then what we can see here is these have closed below but haven't progressed. So we're treating this as a deviation. What confirms this? The fact that price has deviated here and then on the next candle has come right back up to the highs of the previous candles. All right. The same way that this one would have done here before closing below and then revisiting the lows here. We can see then we've got support, 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 and support there as well. So now what we want to do is we want to look at the most recent tops. And what stands out to me are these wicks here. So the wicks here have obviously gone above a level, come back, and then we can see by the candles here, when price has gone up above and failed to close above, we've then come back down and visited the low. Okay, so this support level, which is acting as our range low. So if we once again take our horizontal ray tool and put our magnet on, then this is the level that I'm most interested here. Okay, we can see where it's capped the market here, resistance, 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 once again and once more. Okay, each time the price has come and risen up here, it's gone back below and then sold off back down to the lows. So that's what it looks like on our daily time frame. Okay, and now let's just remember that even if we hadn't seen all of this price action unfold here, yeah, so even if we take this price action out from here, we still get this range, because we can see here we've got a nice clean line capping the market there and price hasn't closed beyond. We've got this clean line that's capped the market all the way here, but we've seen this deviation as price has closed back in and then traveled to the top of the range. And once again, it's acted as key support right there. So now moving on, we want to go on and check this on a lower time frame. So I'm going to now take this from the daily down to the 4 hour. You can see here that we get a little bit more information, right? So this is what's relevant for us moving forward. We can see price come up here, deviate above, close within, sells off down to the low, deviates the low, closes within, sells up to the high, so on and so forth as we go down. And this is a really recent chart. So what we're seeing here is this current move from this deviation that is then taking us up towards the range high. Now, something I like to do with any range is put in a midline, okay, or an EQ. And we can look for that on the chart here. If we hover around the kind of middle section, we can see the dotted lines produced by the crosshairs here. And we can see that we've got a bit of confluence from these areas here. So I like to take the Fibonacci tool. Okay, this is our Fibonacci retracement. We're taking that from the high up here down to the low, so our range high to our range low. We've got our 50% line here. Again, we can just take our horizontal ray. We make sure that it's perfectly on that line. And I just like to make that one size down and put that as a dotted line. Okay, and then what we can see here is we've got our range. Okay, and the sign of a good range is that, as we can see here, we're just playing from one side to another as we go. Okay, and then eventually when price does break out or break down, let's say in this situation it breaks up, what we're looking for is a retest of this and then for price to move higher. In which case, when we break out above this level, yeah, we can use the lower time frames to find a bullish market structure and we can see market pump to the upside. So we can see clearly here where our deviations are and price comes back within the range. So now if we drop this down to a lower time frame where we'd be looking to execute our trades, and I like to use a 10 or 15 minute time frame. In this case, we're going to focus on the 10-minute time frame. We're going to go back to the beginning of our price action, all right? And what we're going to show is that as price comes up to here, okay, deviates, closes below, you could take an aggressive strategy of waiting for the close back within the range, and then we sell off, targeting the midline first, and then the range low. Or you can wait for price to come down, break market structure, okay, which we do here. So price comes up, breaks market structure, we wait for our bearish engulfing candle, or a bearish pin bar, or a bearish inside bar. Yeah, we play that down to the midline and down to the range low. Okay, and then we see our other examples here. As we deviate below, come back above, come up to here, don't quite make the midline, come back down below for a second deviation. And what you'll notice, if you get two deviations, the chances increase that if you then close back within the range, that you're going back to the other side of the range. So we've had our deviations down here, or liquidity grabs or fake outs. Deviation 1, 2, up to here, very small there, up to the midline, and then the range high. Once again, we can see as we come up here to the range high, we get a first deviation, second deviation, comes back in, closes within the range, and sells off down to the range low. Once again, deviation, closes back within, price takes a bit longer this time, but comes up first of all to the midline, then comes up here, retests the midline, and then has the momentum to get up to the range high. Once again, we're at the range high here, we break back within, retest, sell off first to the midline, and then the range low. Okay, something else that we can do as well is we can always pop our indicators on, all right, and look for that extra bit of confluence. So I like to use the B Pro for divergences, okay? Now what I'm looking for up here, if I'm saying, okay, well, we're getting up to a range high and I want to see us come back within, I want to see these bearish divergences, which we can see the cluster of here. We can also see as we get to this point, or this point, we've got a stochastic RSI trending above the 70 line, bearishly crossing down, okay? And we can pick up on some of the hidden divergences on our RSI as well. Excuse me. We can do the opposite when we get down here and we're then looking to play from the range low and up. We can see our nice bullish divergences provided by the B Pro, our bullish stochastic cross, and an uptrending RSI that's packed full of divergences and hidden divergences as well. Okay, so like as always, guys, we're just looking for confluence here. Look at all the lovely divergences we get up here. That gives us a warning that the trend could be about to reverse, in which case we position ourselves well. We've got our stops above this high. So even when we come down here, come back up here for this deviation that follows, we're not risking our stop loss and we get a lovely risk to return back down to the range low. Okay, so look, I hope that's been helpful, guys. If you've got any questions on this, come and grab me in the chat of the nest. I'd love to talk about it. I have loads more video content coming up, so if there's anything that you guys would like to see in a little bit more detail, please do let me know. Don't forget, Information about the bird nest, information about the Bee Pro can be found down in the description. So don't hesitate to take a look. If you're not already a member, you can grab a free trial, come in, see what we're all about. We're all about sharing information, education, and making sure that we progress as a community with a pack full of really amazing traders, great community. It really is a good place to be. So come along and check it out. Find me on Twitter at BC Richfield, and I look forward to seeing you guys around the nest.